Good morning, everyone. Welcome to the room. As you know, trading futures does involve risk. It's not suitable for all investments. Investors' information and presentations for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope everyone is off to a good start to the week. Looking at the daily chart on the fibs, we're kind of sitting right at the 50% retracement of the next halfway back. We sort of came close to the prior 50% and then came down and came close to the negative 23 and then got this bounce. And here we are back at the next 50%. So today will be, today, tomorrow, kind of a pivotal day, pivotal week really, because we've got Jerome Powell speaking tomorrow, GDP tomorrow, consumer confidence today at the top of the hour. We'll watch for that. Lots going on. Next week will be a shortened week, 4th of July. So this week is really the key week. Other than the halfway back on the daily, there hasn't been a ton going on intraday. We had the big move up on Friday, and then yesterday's trading price action could be considered, the start of a bull flag, or the flag part of the bull flag. So we'll see if we go a couple days sideways. If today we start breaking down and we come kind of, whenever I'm looking at a bull flag scenario, if you take the first pole, the bigger candle, sometimes it's two candles, but in this case the big body here, if you start coming back down towards that candle's low, even just 50% of the way down, it starts to weaken the chance of the flag continuing. You want the flag to be up in the top third of the breakout candle, or the big candle. So I'll kind of keep my eye on that. We're going to have a little gap up this morning. That'll just kind of put us between the 50 and the 61.8. So we'll see how things play out. Yesterday there really wasn't a lot going on. The first 15-minute candle came down and filled the gap traded at the prior day's close, so there was no 15-minute play, and then that candle was pretty large, and we just went sideways from there within the first 30 minutes all day. I didn't really have anything trade-wise. Another thing I wanted to show you, if we go to the gaps, unfilled gaps, look at where we closed on Friday. We rallied, and then we settled right at the close from middle of June. And so these prior gaps do come back into play. Actually, I gotta mark one down. So I'll take off that one. I left it so I could show you, and then put on yesterday's close. So we'll be above that this morning. We'll see if we can trade down to it. If we go higher, 4,200 will be in play, or 4020 rather. This close over here on the 9th, that will be in play, and that will be above the 61.8. So at this point, I'd say I'm probably 50-50 on bullish bearish, whether or not we can hold this 50% short. We have some solid resistance over here to the left, but we're sort of in this getting into the throes of summer, and there tends to be a little bit more positivity and upside, less volume, and so it's easier for the market to kind of drift away from the trend that you were seeing in the spring. And then in the fall, things can kind of turn back or revert back to that trend. So we'll see if we get more lift than we've had as far as breaking the 61.8. Pretty strong breadth and advanced decline line right off the open. Kind of make a note of that initial breath, 4.8 and 1600. I ignore the initial tick readings, as you've heard me say time and time again. Give it 5 minutes, and then we'll establish our nicey high and low tick. Starting out kind of like yesterday with a big initial candle here. This one being in the other direction. It's a little surprising because that GDP number coming out tomorrow, I would think would spook a lot of people and certainly hit the media with lots of good, um, fear, breaking news headline kind of stuff. Tesla's broken its little both downtrend and sort of this descending triangle. Not a strong break, but certainly a breaking of the last little swing high here. The major swing high would be up here about, we'll just call it 793. Usually when you get this kind of extreme nicey tick prints right off the bat, you get a move kind of down to the zero line, and then in this case, since they're bullish readings, you tend to have more of the day situated above the zero line, so a relatively low tick might be 0. VIX holding its triangle here. Many, many months, basically the entire year, has been in this triangle of lower highs and then higher lows. We'll see if it can continue that till, through the next month or two. Take another week to come down a little further. Maybe after later next week we start to rise up again. Take a couple of weeks. Go into August, kind of bouncing around, getting tighter and tighter towards this 30 reading, and then after the September Fed meeting, maybe get a bigger break towards, either direction. At this point, it's pretty symmetrical. It's not really giving an indication that it's an ascending or descending triangle. But for all the volatility we really have not had extreme VIX readings. Like the volatility, I guess, I should rephrase that and say for all the down movement that we've not had major negative tick readings. But we do have the full halfway back below us. It's kind of where this current 50% on the daily is eyeing up. Still quite a ways above the pre-COVID highs, but definitely nice having the COVID drop in there for some bargain fishing. This candle looking like it's going to be just as big as yesterday's opening candle. We may go into the same kind of holding pattern off of this monster first candle. Stronger breath than off the open. Congruent with the move up. Even though the candle is giant, the 15-minute would be in play here. bull flag to start the day, we're going to have this big first 5-minute candle, and then so far the one now into the second consolidation candle, if you will. The flag, you can see it on the 512, the sideways movement, but the 5-minute really makes it visible. Currently we're looking at like a 39.50 and a quarter as our 15-minute breakout high, and our breadth and advanced decline line are strong enough where they could certainly support a continued move, but whenever you have a giant first candle, it leans itself more towards a range-bound day. See how small this is the 5-minute chart, but you know, still 13-point candle off the 5 minutes, and by the time the end of the day is done, that candle looks pretty tiny compared to the rest of the day. So that's kind of the first indication that we could be in a range-bound situation, is when you have a really big first, I'd like to say first 30-minute range, but if you go even granular and go down to the 15 or the 5, that can help indicate that as well. So we're at 50 and a quarter for the long, and 1875, or yeah, 839, 1875 for the short. Or we presumably will be here in the next 30 seconds. I don't mind getting the order ready, and then I just kind of watch the time. And if we start creeping back up in price, and we're closing in on that 45 time frame, I can always delete it and move it if I need to, but usually doesn't get me into too much trouble, and it saves me from having to scramble too quickly. So 39.50 and a quarter for that 15-minute breakout long. We'll see if it gets filled. And then on the other end, 39.1875 is where I have the sell stop, and if we come down there and fill that one instead first, then so be it. Yesterday there wasn't anything, like I said, because we filled the gap. Last week we had trades every day, but they didn't really do much. Monday was kind of a bummer. Or no, it was Tuesday, because Monday was a holiday. Monday I got stopped out for a winning trade of +4, but it ended up taking me out to the tick and then going on to be a 20-point winner. So not a whole lot you can do about that, but always stings just a little bit. And then, well, I did the recap video Thursday, talked about trades from Wednesday. Friday I could not get a read on the market, so I just didn't end up having any trades. I couldn't get anything going, or couldn't make sense of anything, so I just shut down early. So for the 15-minute breakout, I'm using the actual high of the candle, so wick and all, versus just the body. There's not really a situation where I use the body and not the wick. I mean, the close of the candle is usually not the wick. Like most candles are closing off of its high or low. So that is an important, I guess, instance where I would use the body, the close. But otherwise, yeah, I'm using the absolute high or low. Oh, and Scott asked a good question. I don't, let's see, did I have that? So my print, I've got 39.50 as the high. Oh, Adam, check to see if you're on, maybe let's look at the MES here. And then you got to pay attention to this 39.34.50. That's the full halfway back. Yeah, I'm going to guess that you might be looking at the MES chart, slightly off, 39.50.75. So that one, if you're going to do it on the micro, you use a 39.51. So usually their prices are pretty close. I don't look at the MES that much, but you know, yeah, they're basically the same market, but you have a lot less volume on the micro. So um, sometimes prices are just a tick or two off. So that's probably what it is. But always good to check your trade ladder if you're using Infinity or Tradevate or some other platform, as I was harping on 2 weeks ago with rollover. Make sure those contracts line up. If you're trading the ES and you're looking at an ES chart, if you're trading the micro ES, you should be looking at a micro ES chart. I guess you get away with looking at a different chart, but the numbers may be just a tick or two off when it comes time to enter. And sometimes, as we've mentioned before, sometimes you get lucky. You get a fill in the micro where you don't in the ES, and people have said, "Oh, I'm in a trade, and I didn't get a fill." If I'm trading the mini, and they end up getting the winner, and I wasn't in it, or vice versa. Sometimes you get a fill in the micro, and it doesn't fill me in the ES, and then sometimes it goes in my favor, sometimes it doesn't. So, but let's see. Oh, for Scott was asking, would you re-enter if, let's say, the market breaks to the upside and it fills me, and I get in the trade and I'm long, and then it peters out and takes me out? Is it worth entering to the downside then afterwards? I don't do that. Um, I I also don't have a lot of data on second entries, or I guess you would call it the opposing entry. Um, my approach with the 15-minute is to get into a trending market early. So if we did break up and then it petered out and it didn't end up trending, then typically there's a lot more retracements here to work off of. And as I was looking at the full halfway back, we did not make it there. And we came kind of far away. Like, this is a nice little situation where you have lower low, lower high, lower low, lower high, kind of all the way down. You break the swing high here. I like this as a long as far as the setup itself is concerned. I was looking for it to be a little lower or closer to the halfway back of the day. 34. If it was within a point, like if this low here was within a point of the 50%, I would go ahead and take it. But here we're yeah, 3 points away. That's a little bit big. Um, Now you could say, well, things are extra bullish today. Might be worth taking a stab at it, but in this case, I didn't. If this was like maybe the second or third trade of the day, or if it wasn't, if I had a good winning day yesterday, maybe I'd be a little bit more aggressive on something like that. But so I guess in some instances, the prior trades do kind of have a little bit of an effect on my um, trading going forward. But broke the opposing, but still in this bull flag here on the 5-minute, you can really see it. I like to see 3 bars at most 4 sideways, and then it needs to break in the direction of the pole, or the bull flag is kind of breaking down. Or if it was a bear flag with a big red bearish bar, and then 2-3 bars sideways, it needs to get moving in that pole direction. Yeah, if you want to trade, I've got a lot of folks who say they trade the micros using the retracements, and then they trade the 15-minute using the mini. So they do one mini contract on the 15-minute because that's more of an all-in, all-out, approach. And then the micros, they're practicing and um, trying to get better at those. So they're using um, the retracements rather, trying to get better at retracements, and so they're using the micros. So either one, you could do micros on one, ES on the other. The benefit there is that if you're long the 15-minute breakout, then you don't have to worry about either doubling up or offsetting your trade if you're only trading one contract or one account with, let's say, the minis. You can see our nicey ticks here didn't even make it down to the zero line, and they've sort of gone sideways in this box. You've got the high at 800 and the low around 200. Very symmetrical here. And unfortunately, when you get these big body candles like this, um, it can go into this consolidation period, and then there's not much to do within that consolidation. We've got the what did I say? Consumer confidence number in 7 minutes, and then I'll leave this 15-minute long up, but there's not always a retracement opportunity, which I guess is the whole point of having both in your arsenal. Let's see here. Day. But the nice thing about retracements on the 512 is you can take them within a trending market, or you can use the exact same setup and take them in a range-bound market. You're just shorting up at highs and buying at lows in a range-bound situation. In a trending day, you're buying at a halfway back long in trend, or selling at a halfway back short in trend. Yeah, consumer confidence here in just 5 minutes or so. Get rid of this. We broke our opposing short, and then now we've got kind of coming down to the long. But remember, we didn't really come down to the halfway back long yet. So more than likely I'll end up waiting for this consumer confidence number to come out. I'll leave the 15-minute breakout above, order sitting there, as well as the short, and because now we're onto our 5th bar of sideways. If you look at the 15-minute, I guess you could say we're in the first consolidation bar. But yeah, I didn't have a whole lot of hopes for this larger. So when we come off, think about it this way: when we come down and we don't make it to the 50% long, like we didn't touch it, it's a big daily halfway back, or a big halfway back of the day. We didn't even come within a point, and then we bounce and we start going up in these little retracement longs, up down, up down. We start kind of trading away, and you're thinking, oh, I'm going to miss the move. And then you come up and you do so much as you break the opposing short, meaning the opposite trade. The direction of this trend is long, is up. So the opposing, or the opposite, is a short. We broke that 61.8. Then you think, oh, well, I need to get in right away and draw up the next retracement long. Well, remember, we didn't come to this 50% long yet, so the volume or the participation, the players involved, there's a lot fewer because this move is happening before the bigger level has been triggered, if you will. And so, you might get this little, 1, 2, 3, maybe 4 little stair steps up. But then as soon as you come down to that next 50% and kind of you break this little swing cluster here, the swing low, and all of a sudden those stops get taken out. And since there's not that many traders in this move, those stops get hit. It's enough to move the market a little bit lower. Some more stops get hit, and then boom, you're already through the 61.8 in 30 seconds. That's also something I kind of look at here with drawing up the retracement. Where's the 50 in relation to like the prior cluster of swing lows, prior support or resistance, that kind of stuff? Because sometimes you're drawing up a retracement. Let's just say the 50% was like right here. Okay, well that is just below the prior swing low here. And in certain cases, it might work out to be kind of a double bottom, if you will. But it's just helpful to gain some context. So now that we're at the full halfway back of the day, let's see. We got another minute before consumer confidence number, but let's see if we can hold here. Yeah, I don't know if the 30-minute. So my guess as to why I've settled on that what I call the 30-minute range, 30-minute high and low, why I use that so much. I would guess it has something to do with all the years that I spent looking at market profile and looking at the market in 30-minute chunks, where it just coincidentally those observations were on 30-minute bars and or 30-minute time frame. And so I was noticing that after 30 minutes, if we have a big range, we tend to stay. You have a better chance of being range bound. If you have a small 30-minute range, you have a better chance of trending. And so then I kind of expounded upon that and went deeper and did more observation and spent more time with it. And so that 30-minute high and low do tend to be good places or places where I like to place a lot of trades. There's not a lot of, or I don't know of any other like major study or trading strategy based off of that per se. It's more of that opening range is again small enough to where a lot could happen outside of that range. It's only 30 minutes of the day. But if we're at 45 minutes in, we're at an hour in, we're an hour 15, and we're still not breaking outside of the 30-minute range, and the longer you go, the more you get complacent and the market's just kind of like we had yesterday, going sideways. 30-minute range was the entire day here of yesterday. Big first candle, and then we just inside the first 30-minute range all day long. A couple little pokes right at the close, but we were able to rally off those lows. So let's zoom in here. Take a look at, we don't really have, I'm going to draw the opposing short first. Because this little swing high is not much of anything, and then this one is above the 61.8. So that's what we'll use as a kind of short break, if you will. It's not the full halfway back short, but it's kind of the major swing high to the most recent swing high to swing low on this 512 tick time frame. Most of what I've developed over the years has all stemmed from an observation where you can't quite place it yet. I'm sure you've had similar situations. You can't quite place why a trade looks like a long or short, or why you're being pulled in one direction. but it is kind of hinting at something, and then you can go deeper on it. And it might just be, the setup is exactly the same. It's just where you're placing that setup. Interesting here, getting the advanced decline line. It's actually a little higher still. The breadth has come down a little bit, meaning the volume ratio, the volume going into up stocks versus down stocks. It was, when I say 6 and change, now it's 5 and change, so still pretty strong. There's 5 times as much volume going into up stocks versus down stocks, but not holding this 50 here. What confidence? Consumer confidence came in lower, not really much of a surprise. Let's see about. You got this one candle pop here as far as doing a crossover trade where we use that as the swing high to swing low. I could be persuaded, but it is a, come on, 30-50, 39-30-50. I don't know. In a low tick, I don't love that. So 39-30-50 is what the short would be if we can get up to it. Like I said, our breadth and advanced decline line are still pretty strong, but relative to what we saw this morning with our super strong first bar, we've given a lot back here, and we still have room to go before we even make it to lows of the day. We'll call it 39.19. But gotta get a little higher first to get a fill. And I'll leave the short open too. Currently we haven't broken above or below the first 15-minute range, let alone the first 30-minute range. Don't mind the noise, just a trash truck out front. For anyone who has kids, you know how much they love their trash truck. Okay, so no fill on that short. Let's see if we can come down, and what'll end up happening here is if we come down and trade towards lows, our fill is an 08 and our low is a 19. So those are pretty close together. My concern is that we would break the lows of the day and get filled on that short, but then immediately turn up if we go range bound and we kind of stay within the range but peak above and peak below. We may actually end up with a long setup shortly after. It would have been a nice, if we could have just got there 30-50, would have been a nice crossover trade. So we'll see if an 1875s gets us filled on the short side. At the very least, if we could break down, fill the gap, we'd move 10 points. So it's not nothing. Not much at highs indicating a short either. None of these shorts really held their 61.8. And with that strong of breadth and advanced decline line, without some kind of high ticket highs, there it goes, it makes it very challenging to try and short within a bull flag because there's so much consolidation. I'll mark our 19 low there. Yeah, consumer confidence number came in lower. It's not really a shock, so yeah, I put an order out for that crossover trade, Paul, but it didn't fill me. But the 1875 just did, so we will see if it gets some legs to at least maybe take us to the gap fill. But the thought here, kind of concern here, is that now we're at the lows of the day, and we could very easily just kind of dip a few ticks in, and then turn around and actually set up in a low tick, 706, not quite low ticket lows, but we could trade range bound and go from the bottom of the range here back to the top of the range, and I will go ahead and mark the high of the day because that is the 30-minute high. So this is what our 30-minute chart looks like. So you have this little dip below lows, and on a range bound day, a lot of the times you just get a little dip below lows and then trade higher, and then maybe you don't make it all the way to highs, or you just trade just a couple ticks above highs and then roll over. So we shall see. No low ticket lows though. It was about a minute off, but not getting a ton of selling pressure here, and almost over. So nothing on the 15 short momentum side. It would have been nice to get a quick break, fill the gap, and then get that bounce. Then maybe come back to like halfway back short. That could still happen, but I guess if we came down a little bit lower, we could get that. I mean, that first 15-minute bar is so big, it's hard to trend very strongly off of such a big opening bar. So we talked about either last week or the week before. The summer months, I definitely have fewer trades. The market is usually just as technical, but a lot of times the ranges and the volume are a little bit smaller. Now we're coming off of pretty big ranges to begin with, so even like a 30-point range that we're in today is still pretty big. A lot of the reason for fewer trades is also part of vacations and holidays and things like that happening in the summer. I'm going to draw our full halfway back at the day. I know we already failed the long, but if this thing goes straight up, if we could get like a double top, there may be some momentum because this 50% could take us down to the gap fill. But that would kind of be the last resistance point, if you will. If we go through that, then just be back up to the top of the range. Could try for a long crossover. I'll keep my eye out for that. Didn't have a low ticket lows, and then this one candle, even if you did call that a swing high, it didn't break before this pullback. That's why I didn't draw up this as a long entry. I generally like the placement along down at lows, just above the 30-minute low. I guess you can make the case that this was a swing low break, or swing high break, if you will. Yeah, I can make that case, but those don't always rip as hard. If you kind of draw a vertical line from the low point, if the swing high is to the left, like over here, they tend to get a harder break. This one's pretty clean, actually. Held the 61.8 and going up pretty steady. I'll leave that up for now. Let me look at the next one here. 39.22.75. Yeah, I've got a 39.22.75 order. See if it gets filled. Kind of running. Nope. We extend. So, this is a good example of if I extend this up. So I just deleted after I said that. Just deleted it. This. Look at this low here. This swing low. The 50% now is like right below that swing low, which if you were already long, you would probably have a stop below that swing low. So I don't want to have a long right below where a potential stop is. So good timing on that question, Paul. So if we back up here, had the order drawn out, or order out 22.75, market started to pull back. It didn't fill, it didn't touch the 50. It bounced and broke the swing high here. So now I don't want to just extend this up another couple of ticks and try to get long here at 23, because now you've got a stop location right above where the 50 is. If you did it stop one tick below lows, below the swing low, it'd be a 23. And that's where the long entry, if I redrew that, would be. Also look at, see how we went kind of beyond the negative 23? But we didn't quite make it to the negative 61.8. That's a little bit weaker. If we can push through the negative 23, I'd like to see us go all the way to the negative 61.8. So good question there. And we came down and broke the 61.8 of this lows of the day to this swing high long too. So kind of a bit like yesterday, kind of all over the place. I keep the 15-minute trade stuff separate, so I don't include that in the two stop out rule. It's just kind of its own trading strategy that just chugs along by itself. Another good question. You don't want to limit yourself so much to say, oh, if I have one loser, I'm done, because there's lots of opportunities, and you're not going to always pick the best one. And sure, that might limit your losses, but it's like saying when I'm 2 ticks in profit, I'm going to move to break even. Well, yeah, you'll have a couple of 2-tick winners. I mean, break evens. You have a lot of break evens, but it won't really get you very far. You take one stop out, then you already gave up 5. Well, you have one stop out, and it offsets all kinds of potential. Even if you're just taking break even, you're still paying commission. Even if your break even was plus commission, doesn't then you're just treading water. That's not what we want. I'm watching for a low ticket lows. I got my eye on this gap fill here because now we kind of had a bear flag at lows. The long um, didn't really get much momentum past the negative 23. Stayed out of the second long, which was a good call. Prevented a stop out, but watching for a low ticket lows down here or some kind of more sustainable bounce. And that's where I say coming down and filling the gap would be nice because it sort of kind of puts the nail in the coffin on that move down. So if you're going to get a bounce, it could happen from there and take us all the way back to highs. Because you're so close to the gap fill, there's a lot of people trying to short here and get to it. Which I might try to do. Getting kind of far. I was going to try and short if it was closer to the 30-minute low, but what are we at here? 1750. Not in a low tick. That breadth and advanced decline line is still pretty strong. It'd be a 39.17 and a quarter. The gap fill is still 10 points away, but may just end up not getting anything to the fill and just have to wait for a fill before taking action. And anytime, deleting this, anytime I get you get an hour into the day and you just still haven't had a trade opportunity, that's usually a sign. Simply for the fact that there's just not a lot of good opportunities present. Not like a sign from God or sign that you shouldn't trade that day. Just literally, there's not that many opportunities, or you haven't been filled. Um, there's just not as much going on. That's all. Now, not doing the 1725. I'll put a mark here for our fill price. You can see a lot of times um, that initial move on the 15-minute usually ends up being the right direction. It's just a matter of, can you stay in the trade without having to use like a 20-point stop or something. Yeah, if this little short here was something like that, I would like that. Even when it came down a little bit lower to where the 61.8 lined up to the 30-minute low, I was game. But then we started to not just go even lower, but we also were breaking the swing lows, these little dips down here. So that's when I took it off. Now we got something like that, but I'd rather wait for a little double top here versus just shorting the low, in given today's context of this big 30-minute range where we've struggled to make it lower and struggled to make it to this gap fill. If I feel like I'm being challenged by making sense of the chart, I usually try to back off on the aggressiveness of trying to get into trades. Because on the good days and winning trades, they come pretty smooth and easy, so I don't want to force anything and just dig myself a hole that I don't have to. I will have to close down a few minutes early today, maybe 15-20 minutes before the top of the hour, but might not be a bad thing today here. Do have some puts out on this SPY. I talked about that in Friday's video. See if they do anything. I've got next Friday as my expiration, which not ideal with a 3-day weekend with 4th of July. But I figured, well, if we can drop, towards the end of this week, and I can take some off on Friday before the 3-day weekend, then that locks in some gain and reduces the risk. If we just go up and trade at 90, if we close above the 61.8 here, 396.33, then I would just close them out. And you're risking so little to make some really, really big gains. You gonna give us something here, market? I find that the summer's not much different as far as like you don't have to trade a different strategy over the summer. I just find that the ranges are smaller. The market's still just as technical, but usually there's the moves are a little bit slower, the ranges are smaller, so I'm still taking retracement trades, still taking breakout trades. I just they might take a little longer to materialize, or it might just be a 4-point trade instead of a 7 or 8-point trade. Maybe a little double top here. If that broke the 61.8, you'd be looking at like a 39.15 and change, somewhere around there. I might take a stab at that. I know the 61.8 lines up with this swing low here, so I'm just going to delete that just so I can clean up my chart and be ready. Give me another tick and we'll go for it. There we go. 1650. It's pretty small, but see if that can fill. 39.16 and a quarter, excuse me. 16 and a quarter. And that's short. Kind of an anticipatory breakdown trade, if you will. That's how I'd classify it. We didn't quite break lows. We broke the swing low, broke the 61.8. There it goes. Let's see if there's anything there. Just kind of looking for this gap fill to fill, but it's kind of a snoozer here today. I guess I'd just call it a micro. Pretty late in the morning, almost an hour in with nothing going on. We would need a 13 to get a first target, so that's not terribly far. Let's see if it wants to do anything here. There we go. I'm going to move to, yeah, usually I move to break even here. There we go, first target. All right, we're in business. Let's zoom in here and see where we can tighten our stop to. Let's go to break even, 39.16 and a quarter. So 39.16 and a quarter is where I now have my stop, and we'll drag it down. 39.15, and now we're talking. Remember that 08 is the fill. If you want to put a contract or two there as your target, you could. I typically tend to just trail as best I can. 39.14.75, and I'm probably going to have to move it lower. This is when things start moving quick, and you got to move fast. Okay, I'm just going to go above this swing high. It is 11.75. Let me go 12.50. Okay, there's our 08. Let's draw up the next retracement here since we're tight. 10.75 I'm going to do. And we go lower. So these numbers I'm calling out are just the stop, moving the stop down. Yeah, 39.10.75. And I'm doing it tight like this, drawing the retracement because we're at the gap fill. So if we bounce here, I don't want my stop to be way up at break even. I want to lock in gain if we bounce. But 10 go 10.50. 39.10.50. And okay, now let me go above this swing high. 39. 10.50 is fine. I'm gonna have to move it down anyways. Next retracement. 775, 39.0775. You can see how some of the times you're by the time you get your order moved, you're moving it again. Um, yeah, to go actually go 39.08 and down some more. Yeah, almost be inclined to trail each candle here. It's looking actually pretty good. Filled that gap and ripped through it. That's a good sign. Our low is 92. Is that our low from yesterday? Yeah, 92. So that's another 10 points. I might go 05. That's already 10 points of profit. Yeah, I'll move it to 05. I'm going to try to trail each candle here versus giving it too much more. 39.05 is where I have my stop. There it goes. All right, 39.05. What was our entry? 16 and a quarter. Not bad. Not bad at all. Now you can break your contracts up and do, assuming you have like more than three or more, I guess. You could do 39.05. Let's say you took one off at the 3-point first target, and then that 39.05 you could trail with just one of the two that you have left, and then the third contract you could trail above this. How I have this retracement drawn. Actually, it should be drawn another tick lower, like this. And so the third contract could be, its stop could be above the 61.8, but sometimes it can get a little tricky to split up the stops. And when you're moving that fast, yeah, sometimes it just gets a little tricky. So, and even this, if I in 08 probably would have kept you in, yeah, up here, but I'm fine with that. 39.05, that was a good move, given given the lack of entries that I was able to get in earlier. So 3 points on the first half, and then 11 and or let's see, yeah, 11 and a quarter on the second half. I'll take that. So I guess to recap, since once we got moving, it got going fast. We were in this little double top here. Okay, I drew up the halfway back long. We held the 50% and bounced. This is like the perfect double top with the swing low. Perfect setup as far as like the double top swing low at the 50% goes. We broke the 61.8, broke the swing low, and then you just draw up the trade in the opposite direction. Got your fill. And like I said, it was kind of anticipating the break of lows, which we didn't have yet. If we would have waited for that break of lows, look, there's no retracement all the way to the 50%. And then from there, I start by trailing the next 61.8. But then since that 61.8 got kind of far away from the actual price, then I just came in and trailed the swing high. Kind of did a little bit of both. Trailed the 61.8 there, trailed the swing high, and then just came in. We started getting pretty low, down, 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 down. So in here, instead of trailing this 61.8 at like 39.08, I just dragged it down as best I could above each candle's high. Probably could have had a little lower, 04 maybe. I got out at 05 and whatever. So yeah, good good little short. I know sometimes it feels like, man, the markets just, you draw up these setups and, oh, I didn't get a fill. It didn't come up to, didn't retrace all the way to the 50%. And you just can't get frustrated with that. You just have to, the market's going to do what it's going to do, and sometimes you'll be in the move, and sometimes you won't. But good that we didn't take, an unnecessary stop out early whether it's right off the open, or let's say just drawing up what was that little long here that was just below this swing low, and the 50% was just below that swing low, so I said I'm not going to take that because you could get a stop run real quick, and then boom, you're 2 points, and you're already. It's like ding ding. That's the worst. You hear the bell and you're in, and then you hear the bell and you're stopped out, or whatever sound you have on your platform. So yeah, good one. I'll take that, and if it's a one and done for the day, that's fine. So I guess that's what I mean about the summer being a little slower. I don't have as many trades. Um, the moves, I mean, that was a good move, 11 points. So not that small, but the last couple of months we've been seeing some really big ranges, and folks go on holiday, trading in general, and institutions are just not as heavy. Business in general, you talk to business folks, they're not as heavy on the gas, just because summertime in this part of the world, and people are going out and enjoying it. Ooh, straddling the gap fill. That's a good observation. What would that look like? Um, my first inclination for straddling the gap fill, meaning if you trade through it, would you then draw a retracement that kind of straddles, hangs over either end? And that would look something like this. My first thought would be no, because if you fill the gap, there's a good chance of a bounce. Whereas if you break a halfway back, like when you break the halfway back long for the day, there's a good chance that you'll make it down to lows of the day by breaking that 61.8. Whereas if a lot of times when you fill the gap, you overshoot it by a few ticks or a point. And so I won't want to get stuck. I mean, this one worked out if you were to short this little micro here, but we could have just as easily come down to the gap fill and then gone a few ticks more and then just ripped in the other direction. So without having 50, 60 trades to look at, I would lean on not doing the straddle there. Where I really like it is when we break a larger halfway back, like the halfway back of the day, and then if I back up here, and I guess this is one of the ones that I tried and didn't get a fill, and then you draw up the retracement that has a swing high before and a swing low after the halfway back has failed, and then you're just getting in and almost like a continuation of the move down. So that's like the first short after the halfway back long fails, if you will. So those I like. And yeah, it is good to go back and review these sessions, or at least review your notes later in the day. I usually don't do it right away. I make my notes, place the trades, make my notes usually on either a Post-it or paper, and then a few notes in Excel, just on like some basics, that I entered, and the direction, and the price, and then I can go back and do a little bit deeper analysis later after I've had some time to get away, and I can kind of verify in a bit more of an objective state with some more information that you have to take when you're looking at trades that you took after the fact. You have a lot more information to go off of, so that's where the notes are really helpful. So that it's like, okay, this is what I was looking at the time. I don't know what I know now. So you got to give yourself a little bit of grace there. The gap fills do act as magnets, as far as to fill the gap. And then on a day like today, you have a little, look at this 5-minute chart. You went past it, past the gap fill here, this 39.08. Then you rallied back to it, and then now we're moving down, but actually kind of moving back towards it. And then keeping the bigger picture in mind and zooming out halfway back short of the day, the daily halfway back short is right where we're at. So it makes sense that there's selling pressure, even with our breadth and advanced decline line. And I wasn't super comfortable trying to get into a short at highs, which would have, if I could have got in and stayed in, that would have obviously been a nice entry point. But at the time, you're looking at a breadth and advanced decline, and they're very bearish on a gap up day where we have just ripped higher. So yeah, don't go back and kick yourself for, oh, I should have shorted at highs and I should have done this, and I should have read that tweet and followed what such so and so said, because you just drive yourself nuts. But keep in mind this daily, even though things don't feel as negative as they did the last time we were at the 50% like this here. I mean, even there, now that I draw it up and look at the chart, things weren't looking quite as, or feeling quite as negative, or bearish. So similar scenario with coming up to the 50%, and I'm fine risking a little bit, the distance between the 50 and the 60.18 as my stop, to see if we get a rollover and a leg lower. Even if you only made it to the halfway back long and took off part of the position, took off one of the puts, if you bought 4 or 5, or even 2. I usually take off a little bit if we on the first rip down, just as kind of the first target to lock in some gain. But if you're trading 10 contracts, it might be 2. Oh, great, Ryan. Yeah, I do know a lot of people use retracements on without the 512, like a 1 minute, like you're saying. That's yeah, absolutely. You don't have to trade the 512. It's just what I've kind of gravitated towards. Same with Hakanashi. You don't have to use that. You don't have to use you have to use a 5-minute chart for that matter. I do find it helpful to have some kind of larger time frame. So if you're looking at a 1 minute, maybe you have a 15-minute or a 30-minute chart, just so you can kind of keep your eye on things like the gap fill. If you're just looking at a 1-minute chart, which you could do, but if you're just so zoomed in here and you don't have much context and you're just looking at the chart like this, sometimes you can get lost in drawing your retracements, and you're like, oh well, do I draw a really tiny long like this, and then that broke by a tick. Should I be drawing a short here? So as long as you don't get lost in your retracements, or you kind of segment yourself to, okay, I'm gonna trade it just off the 1-minute chart, and I'm only gonna do it for the first hour, then I'm be done. Just give yourself some kind of bumpers, if you will, and yeah, you can do very well. So yeah, great job. I love seeing and hearing when when things start to click, and you, especially, I know there's a lot of folks who have spent a long time kind of bouncing around to different strategies or trying different things, and it gets it gets old and frustrating. We're in a low ticket lows here, kind of closing in on yesterday's lows, but not quite there yet. But yeah, so love to hear that. Um, Looking at this move down here, the swing low, I'm sorry, the swing high is all the way up here. So there's not really, yes, we had a low tick at lows here, but you would have to come all the way up to here to break the swing high. And like I said, I'm going to have to boogie out just a couple of minutes early here, so I think we'll wrap things up. And yeah, if you have questions or want to talk about a trade or a chart or anything like that throughout the week, just shoot me an email, tim@eminimind.com. Happy to help. Um, and I know a couple folks are asking about like one-on-one stuff. Yeah, if you don't have to, if you just want to get together and do a hour and review some things, or if you've been stuck on a certain setup or want to go through some charts or review a bunch of trades, we can certainly do that anytime. It doesn't have to be a part of some kind of I usually do like that fall apprenticeship program where I work weekly with usually 3 or 4, maybe 5 folks, but that's about all I can handle to do um, one-on-one stuff individually. So, but yeah, if you wanted to just do a one-off where we go through a bunch of trades or review your trade log and kind of work out some kinks, I'm happy to set aside some time for that too. 47, 47. Technically, that is a low ticket lows, and that is a swing high break. That's kind of what we'd be looking at. But anytime we have like this big straight down movement like this, and we're just red, 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 red all the way down, you tend to get like a straight back up here, green, green straight up. And I'm not gonna bother with this long here, but especially because we traded at the short first. But that's kind of what it would look like if we didn't trade at this short, and we didn't go as high. I like high ticks and low ticks of the day. Those low tick at low longs to be small, or a high tick at high short to be small, like the retracement drawing itself versus coming up here and drawing it big like this. So I'm not taking it, but